Hello, everyone, and thank you very much for being with us this afternoon. Today, we're very excited to have Princely Matthew, host of the Smart Money service at ElliottWaveTrader.net, going over how to use and trade with the Smart Money indicators. So we're very happy to have Princely with us and appreciate him taking the time to walk us through these indicators and really how he sees and believes the best way to use them to maximize your trading, how that is and how that comes about. So as well as, of course, we've got a couple new indicators that he's recently launched. So he's going to be going over those tonight as well, kind of giving us a recap of what he's been finding with them. And again, how can we best utilize them in our trading? We are going to welcome questions at the end of the presentation. So if you have anything that you want to ask, please go ahead and ask it at any time. I'll be logging those and forwarding them on to Princely on your behalf. So without further ado, please allow me to welcome Princely. Princely, thank you so much for being here.
Thanks, Tom. Hi, everyone. This is Princely. Thank you all for joining. We will be going over the smart money room indicators and how best to use them and trade with them from my perspective. Okay, so let's jump in. First of all, we'll be looking at the open interest indicators or the razzmatazz indicators. Then we will be looking at internal based indicators where, the NYHL and the secret indicator, all of that will come in over there. Then we'll be looking at the different pivots that we use within the room. And then the indicator table, that is something newly that I've added into the room, which contains the core indicators that we track and the trades that I place based on those indicators. Then lastly, we look at the different types of reports that are presented within the room and the best way to use all of them together in your trading. Okay, so let's jump into the open interest indicators, or also known as the razzmatazz indicators. So when we talk about open interest, we'll be looking at mainly ES or SPX futures. But bonds and GDX are also covered, though not as frequently as ES. And the level of accuracy that we see in ES, we don't see that much in GDX and bonds. So I generally focus on ES, and GDX and bonds are kind of, we just look at them once in 2 days or so. So first, I just wanted to quickly look at the different option expiries that we have today in ES. So if you look at the calendar, we've got today we have earlier, when I think way back we used to have just the monthly OPEX, which is the third Friday of the month. And then after that, we had ES options expiring every week, which is pretty much every Friday. And then recently, we got the Monday and Wednesday options also added. So now pretty much we've got 3 option expiries on ES every week. So that's a lot of data to go through. So what we do is we collect all of this data. So there is a website on CME that allows us to pull us all of this data, the different expiries, week 1 to week 4, and the Monday and Wednesday, and all of that data. We get them all, and then we put them into a spreadsheet. And using that data, we create this what is known as a razzmatazz wave. So the razzmatazz wave has got different versions. The shortest form of it is the short-term razzmatazz and the daily razzmatazz wave. We just call it the razzmatazz wave. It's nothing but open interest plotted against time. So the one key differentiator over here is that we look at open interest as opposed to volume. In most of the analysis that you find outside of this room, on other sites, it's based just on volume. So when you say volume-based put call ratio, let's say you have an option today, a put or a call, and you sell it to somebody else. The total number of outstanding puts or calls have not changed, but then that gets registered in the volume. But when we look at open interest, we don't do that. We only look at data that is actually created, new data, and that is the only thing that we use. Just because an options exchange hands, that does not concern our analysis. Right? So that is one difference over here. And we only look at open interest. We do not concern ourselves with volume at all. So only if a new option is created, we look at that data. And then the second thing is the contrarian nature of the OI or open interest analysis. The way that we look at this data is that we consider that the bigger money or the smarter money is selling the options, and we have retail investors and people with less sophistication, actually buying the options. Because the reason is that to actually sell options, you need a lot of margin, bigger capital, or you need a lot of complex strategy behind that, and that's not something that a normal retail investor would do. So we consider the sellers of the option as smart money and the buyers as retail or dumb money. So because of that, we consider if the put call ratio, if more puts are being sold than calls, we consider that that data is bullish. So what this means is that if the put call ratio is rising, is ticking higher, we look at that in a bullish way. And if it is falling, which means that it's ticking down, it means that more calls are being sold, we consider that as bearish. Okay, so the short-term rationalized wave over here, if you look at this chart, is the gray line, and the daily rationalized wave is the red line. So the daily rationalized wave is the put call ratio of every single date plotted against time. So if you look over here for the 21st, the value is 3.62. It's this Friday's data, and over here you have today or Wednesday's data. It's 2.11. So we plot each of these put call ratios against time, and this will change every day. So which is why it's so important to look at it every day. And so from the peak that we had last week, it was pointing down into today or possibly tomorrow. And from there, we're pointing up into Friday. So we kind of use this as an indicator for market direction. So we were actually looking for a low today, possibly tomorrow. So the way that the market, I mean, obviously the market went a lot much higher into, pretty much the last few hours today before we fell, but still it kind of classifies as a low. And from this low, we're expecting a move higher into Friday. So that's the way that we interpret or we use the rationalized wave, and we're looking for a high on a Friday, and then after that, we're looking for a low, move lower down into around the end of the month, right? So just because you've got the peaks over here like this, there are several peaks over here, it doesn't mean that we should short those peaks because the overall trend is up. That's why we look at bigger time frame indicators and like the NYHL or the PCR and things like that. So the best way to use this would be to kind of use the low points to time it and enter in on the long side or align yourself with the bigger picture trend. That's the way that I would use this indicator. Okay, so the shape of the daily rationalized wave, we can use it as a forecast of price direction. And one important thing over here is that it is mostly, we will look at the direction, not the magnitude. Just because we have a big move in the red line does not necessarily mean that we'll have a big move in the market. Mostly we try to pick the lows and the highs based on that. And then the day-to-day changes will offer us a lot of clues. And the direction that the data moves is also important, right? So for example, if we look at the reports that I put out every day, I kind of try and talk about what the data did for, what to expect for today. So if you look at today's data, it was all uptick. So the SGPCR is up, the short-term rationalized wave is up, next week is up. So the interpretation is that the data is bullish. So this is the kind of information that we put out every day. It kind of gives us a bias for the day, and what to expect. Okay. So the next thing that we can look at is the scary guy put call ratio, the SGPCR, which is the overall put call ratio on ES. So the short-term RAS or the daily RAS, it was more concerned with the week-to-week value or the daily values. But the SGPCR is the overall puts by calls on ES. So it's like every expiry added in together, right? So it kind of gives us the big picture trend. So if you look over here, this low that you can see at 1.4 or so, it is into 2016. And from there, we have had higher lows throughout this whole uptrend into 2017. And in 2017, from then onwards, we began to see lower highs and so on, but the market kept on going higher, right? And then finally, we formed a low over here at the December 24th low last year. And from then, the SGPCR has been going up, again, making higher lows. So this SGPCR kind of gives us an overall picture of the trend. And more often than not, it will give us advance warning of what the market is going to do. In this case, though, it happened much earlier. The market kept on going higher. 2018 was the euphoric time in the market. So it just kept on going higher. But most of the time, if you look at this low here at 24th December, the market bottomed at 24th of December. The SGPCR actually bottomed a few days earlier. And another important thing over here is that if you look at where it bottomed, 1.5, pretty much where 2016 bottomed. Right. So the absolute values also can give us some clues on what to expect. For example, right now, the SGPCR is still going up. It has not begun to top also. So that kind of tells me that, we need to expect that whatever we're going to get next, the pullback is just going to be a wave two. And also the PCR has got room to go up to 3.2, which is where we had our earlier talk. So there's a lot of room for it to go higher. And it hasn't turned yet. So just kind of clues that we can get based on the SGPCR. So directly after the SGPCR, the other thing that we need to look at is the long-term razzmatazz wave. So what this does is we try to, what the long-term razzmatazz wave does is we have got some arithmetic behind it, and what we do is we try to we try to figure out what the value of the SGPCR would be in future months. Right. So for example, over here, if you look, we had the low point in December 2018. We were pointing higher until March, which the expiry just got over 318 last week. And from this March expiry, we are pointing down into May expiry, and from May expiry, we are pointing higher into September. So what this chart is telling us is that we have to expect a pullback lasting around 2 months from here, right? So most likely a wave 2 pullback. So the long-term razzmatazz wave kind of tries to project what the SGPCR would be in future months. And based on that, we can get an idea of what the trend on ES would be in future months. Right. So if you look at how it looks when plotted alongside SPX, this is how it is. The blue is SPX and the dotted line is the PCR. This is basically SGPCR. And from here onwards is the future value and the long-term razzmatazz wave. So again, the PCR topped way early in 2017. Market kept on going higher. Then from around here, it was back in trend, and it has been following along with the PCR so far, at least for the past, I think, around 6 months or so. So pretty much bottom where it had, the PCR was saying that it would bottom, topped where, well, so far anyway, March was where it was supposed to top, and then we're looking for a pullback into May, and from May into September, it's pointing higher. Okay, so that's it on the long-term rationale wave, and that covers all of the open interest indicators. So if there are any questions, we'll go through them at the end. I'll go to the next slide. This is the internals. So when we say internals, we're mainly talking about market breadth. Market breadth means advances, decliners, new highs, new lows. So basically what the market is doing under the surface. Instead of looking at just the index, we look at what the components are doing. So there are two things that we mainly look at over here. That is a secret indicator and the NIL, the NYHL, NYSE new high, new low indicator. So we'll quickly look at the secret indicator. I'm not, this is a proprietary indicator, and so the math behind it is going to remain secret, but I'll just explain what it does. So the red dots that you can see, okay, I guess, 1 second. Okay, the red dots that you see over here on this chart is a secret indicator. And the idea is that when it is ticking lower, we consider that as the trend being down. And when it is ticking higher, we consider the trend as being up. And I report on this every day in the daily reports. And the black dots are kind of an accompaniment to the secret indicator, just so as to give us a confirming factor, because just relying on the red dots or the secret indicator alone, there can be periods where it goes against the market. This one is a very good example over here. You see the secret indicator ticking lower pretty much for, this was a very choppy advance. So, it kind of went in opposite directions. But if we combine the red dots and the black dots and only consider it as trend up and both of them are ticking higher, it works much better. So the way that I use this is, if both the black and the red are ticking higher, trend is up. If they're both ticking lower, trend is down. If they are in opposite direction, then we take it as trend neutral. Okay, and this information is shared on a daily basis and also in our core indicator table. Okay, so that is the secret indicator, and then we'll go on to NYHL, which is the new highs minus new lows on the NYSE stock index added on a cumulative basis. So every day we get the total new highs minus the new lows, and we add that to a cumulative number that gets added on to every single day, right? And this is on a 12-month basis. So the 12-month basis one is the one that you see on your screen right now. This is the one that is available in stock charts. So the gold line that you see over here is the cumulative value, and the blue line is the 19 EMEA. So whenever the gold crosses the blue to the upside, you have a buy signal. Whenever it crosses to the downside, you have a sell signal, right? So the problem with this version, the 12-month version, is that it is lagging, really lagging. At tops, because we tend to have rounding tops more often than not, we kind of, get in on time or get out of the market on time. But when it comes to bottoms, because even the most recent bottom, it was a sharp V-shaped bottom. So we we would have missed out on a lot of the upside because it turned up only, around Feb or something like that. If you were just using the blue line, if you're using the red 2 or the 39 EMA, it would have been much late. So because of this, I created another version, which is based on the 1 month. So this is, again, same principle, new highs minus new lows, cumulative, but on a 1 month basis. So if you have a high in a stock and it is higher than the last 1 month, it is the highest value that we have within the last 1 month, then you have a new high. And similar for a new low. So you take the new high minus the new low, add that together, you get a cumulative value, and that gets plotted against time. And we keep on adding to that every single day. And that is a cumulative line that you can see over here. I pull this data out from my trading platform and add them to a spreadsheet. And the blue line that you see over here is the cumulative. The red line is the EMEA. So whenever the blue crosses the red lower, you have a top. Whenever the blue crosses the red to the upside, you have a bottom or a trade long signal. Right. So if you look over here, you had the last sell on September 14th last year, right? So the market was around 29.04 at that time. So what we are around 40 points of it in the top. So it was not too bad, right? We got out of the market very close to the top. Now, if you look at the bottom, again, the problem over here is that bottoms are V-shaped, tops are more rounding. So that's the reason why you're able to get out of a top much easier. But when it comes to a bottom, because it's V-shaped, we actually got a buy signal only on Jan 14th, and we are already it was around 25.80. So we lost around close to 250 points off the lows. But still, it's not too bad because since then we've gone up around 270 points. Right? So not too bad. I mean, we cannot. The problem with designing an indicator is that we have to be careful not to make it too sensitive because that is going to result in a lot of whipsaws, and we cannot make it too less sensitive like the 12-month version because that will get us very late into trades. So one thing that I feel is that the 1M version, it is kind of the best of both worlds. It keeps you in a trade for as long as possible, and it also gets you into a new trade as soon as possible, right? So in my back test, I found it to be the best version. So it is what I'm using right now as one of my core indicators to trade around the market. Okay, so we look at how exactly we can use this in future slides. Okay, so next thing that I wanted to look at was the pivots. So there are two types of pivots that we use. The pivot points. This is the CAN pivots that we have within the trading platform that we use. I mean, it is there available on TOS. It should be there available on various other platforms too. So the purple line is the daily pivot. The red lines are the resistances, so R1, R2. The green lines are the supports, S1, S2. Generally, in an uptrend, the easiest thing to do would be to just buy when we test the daily pivot. Now, provided that it is earlier enough in the day. So if you look at how the market was acting until today, today broke through. But every other day, if you were to just buy when we got very close to the purple line, which is our daily pivot, you'd have done fine. Here's an example over here. Here's another example. Here, not so much. But the idea is that in an uptrend, in a bigger picture uptrend, on a daily time frame, if you're trading intraday, you just buy, pull back to the daily pivot, and take a few points stop, right, for maybe 4 or 5 points. That's your R, and whenever you get to 2R, you let the trade go. So even if you are successful, let's say around 40% of the time, you'll still make money. So that's just a very basic idea on how to use for trading. There is a post that I've written on the in the main room that contains a lot much more detail about this and how you can use this to trade. So the pivot points is one thing. The second one is the gray zones that I've drawn in here. So again, this is something that I draw in manually. It is just based on what the market has done in previous time frames and previous days with those zones. It's nothing very complicated about it. It's just that what is support becomes what is resistance becomes support once you trade over it, and what is the opposite is also true. So we have these points over here, and once again, whenever the market trades against them, it is if the big picture is up, we can buy the pullbacks into those zones. Okay, and if you look at bigger picture, larger time frame, this is a 4-hour chart. So back in last year, we hit the 2800 zone 3 times. That was a triple top. And this time, when we approached that zone, that was one of our major zones. And I even spoke about this a few times in the main room. So when we approached that zone, we had a pretty good pullback from there, 100-point pullback from there. Then we came back up, got to that zone, back tested it again, and then took off. So that's how the way that we use the zones. And the next important point, because we got over that, is at this area, which is the earlier support over here, that is 2865, then 2900, and then the all-time high is 2950. So that's the way that I draw those gray zones, and those are also pivots that you can use for your trading, either for intraday trading or for if you want to use that for fine-tuning on your bigger picture time frame entries. Okay, so that's it on the pivots. The next thing that I wanted to look at is this indicator table. So the indicator table is something that I started to share newly in the service. So it's right now I'm sharing this manually every day, but it is going to be added in as part of the service very soon. Most likely a new page. All of this information that you see over here is going to be present in there. It may not be in this exact format. It may in fact be more than one page. I'm not very sure, but we'll have all of this information over there. And what this is basically there are 6 sections over here. The smart money, 6 sections, but it's actually just 3 split into 2. We've got the core indicators that are currently active, the core indicator history, those are inactive, marked in gray. Then we have the room trades. Okay, we'll talk about the core indicators. So the core indicators are just the NILE 1M and the secret indicator combo, the 2 things that we just looked at in the internals. The reason why I do not have anything like the razzmatazz over here is that I wanted to keep this as mechanical as possible. The thing with the razzmatazz, I mean, there is always a room for some subjective interpretation over there. But with the NILE 1M and the secret indicator combo, there is no room for misinterpreting the data. It is completely mechanical. If it's up, it's up. There is no way that you can massage that data. So that is the difference. I mean, that is the reason why I wanted to keep these 2 in the core indicators, and both of these are currently active and they are trend up. They are if you look at NILE 1M, we had the trigger on 14th of Jan, trend is up, signal price 25.80, current price, okay, that was from earlier today morning, and we are up around 10%. The secret indicator combo had a few whips back and forth. So, but then we had an up on 28th of December that was closed, then again went up, closed again. But right now it is active again, up from 13th of March, and it's up around 1%.
Hey,
So
Prince,
whenever this, yes,
I'm sorry to interrupt you here, but just for this table, are you able to make this slide a little bit more full screen? Just for
sure,
some people that are having trouble with the formatting.
better.
No, I'm still seeing it the same. Is it the can the presentation slide go into full screen or presentation mode?
Okay, let me see.
If not, it's okay. I do just want to let everybody know in the webinar platform at the very top, you should also be able to zoom. But so I don't want to slow your roll because I know you're bouncing back and forth, so this might be easier for you to keep. But
Now let me see if I can. I'm not sure. I am. Okay, is that? I think it should be okay now.
that's definitely a lot better.
Okay.
And again, people are also saying the Zoom's working for them as well. So if this does, if you need to go back to the other way, that should be fine as well too. Thank you so much for doing that, especially for this table.
Yeah. Sure, Tom. Okay. So okay. So that what this means is that we have these two active right now. Whenever they go to the secret indicator combo, may most likely will go to neutral. When it goes to neutral, we'll just move it out of here. Nile 1M, whenever it goes to trend down, we'll move this particular instance down to the history, and then the down becomes the active signal at that time. But right now, everything, both of them are up. Okay. And then looking at the trades, these are the trades that I place based on my discretion. But I generally look at what all the core indicators are doing and maybe even try to fine tune it a little bit using the razzmatazz indicators. You know, what the daily razzmatazz wave is doing, or is the data looking bullish, and so on. You know, I can make decisions on the trade that I have open. So currently, right now, I have no trades open because, you know, I'm kind of looking long in the tooth and looking for a pullback at least, uh, especially post OPEX. There tends to be some weakness. So I actually shared a little bit about all of this in the main room as well. So for all of those reasons, I decided not to keep any trade open right now, even though all of the indicators are currently long. And the closed trades will appear below this, all marked in gray. We had a few trades since our buy signal in Jan 14, which is when I actually began posting these trades. Okay, and the trades are posted as alerts. Entries, stops, exits will all be included in the alert. Okay, and lastly, we've got the long-term indicator, which is just the Nile, which is the NYHL 12-month version. So we already looked at that. The main problem with that is that it is slow, but because it is slow, it's also a long-term indicator. And usually we have a signal that triggers. It can stay for several months, maybe even 1 year or so. So this one triggered to an up signal on 2790. So obviously very slow over there. So we had a sell signal on the 3rd of October. It stayed trend down for a long time, but then it gave back a lot of that and gave a buy only at 2790. Okay, but it is trend up right now, so it kind of makes sense that, you know, whatever pullback we're going to get next will be just a wave two. Another thing that supports that. Okay, so that's it on the indicator table. Okay, so So next, I just wanted to talk about all of the data that is shared in the room. Um, so I post daily reports on the ES every day, except for Monday, because there is a weekend report that gets posted on Sunday. So that kind of covers in the information for Monday, right? But apart from that, from Tuesday till Friday, we have a daily report out on ES. And for bonds and GDX, I post the data out once in 2 days. And this is the information that you can get from there. Basically, what the data did, what the secret indicator combo was doing. I'll want to miss on a buy, and then I kind of give a blurb on what I would expect to see in the market today, and all of the pivots data. Okay, then I also post the core table. Right now I am posting that, but eventually we will be including that as part of the service on a separate page. Okay, so those are my reports that I post. Of course, El Hombre also posts his stuff whenever he can. So yeah, this is one example of what he did. I think he posted this in the main room as well. So kind of had a target of 28.58. That's pretty much where we talked today. We have a few members who contribute as well, apart from my report. So this is all what you can get to see as room content if you are not a member currently and wish to join. Okay, so how to use the data best? The easiest way to use the data is just follow the trades whenever I post them. The thing is that I don't trade very frequently. I go with what the NYHL 1M is saying, but I look at a lot of other data too, some other internals, the Ratsmatas data and all of that, and decide, okay, do I exit the position or do I just hold on? I try to be a little bit more proactive with the trade. It may not always be the best of ideas, but still that's the way I trade. So following that is one way to go. The other way is just follow what the NYHL 1M is doing. So when it goes to a buy, when it goes to sell, or short, if you are set up to short. So that is a completely mechanical way to do it. And it's in some ways that is really it will probably even be better than following my trades. I mean, the whole human factor is removed out of the equation. You just follow what the 1M is doing, right? So it is on a buy since Jan 14th from 25.80, still on a buy, right? And then from the sell, we actually got about 11.3% return from its sell back in September. So that's the second way to do it. Just follow what that indicator is doing, completely mechanical. The third way, a little bit more proactive, bring the secret indicator combo into the fold. When we have the secret indicator combo pointing against the Nile 1M, I mean, there can be a situation where Nile 1M is up and the secret indicator is down. In such a situation, you can actually just hedge your longs, or reduce your long position, whichever you're more comfortable with doing. A good example is the short that we had from last year. Nile 1M went down on 14th of September from 29.08. We only exited at 25.80, but then the secret indicator combo actually went to a buy at 24.89, so around 100 points earlier, right? So if you hedged over there, or if you reduced your position over there, you kind of saved around 100 points, right? So that's one way. One other way to trade, you just when it's pointing against each other, you just hedge yourself and say, be a little bit more risk averse in your portfolio instead of just completely mechanically following the 1M signal. Okay. And lastly, just intraday trading. I spoke about this already, using the pivots or the gray zones. And, if you use the daily rationale wave also to determine directional bias, you can do that. Or if you can also use the pivots and the gray zones if you want to time in your entry uh, intraday, but positioning yourself for a bigger time frame trade. Okay, so that's pretty much all that I had.
Princely,
So
what's
if
really
there,
interesting about what you're presenting there, especially with the table, is I like that you've kind of developed this to you're telling people what the bias is based on these indicators that you've been tracking, and then as you were kind of mentioning, people are then able to adjust to have it fit and suit how they like to trade. So if there's somebody that might be long an instrument and then would be willing to sell some calls or buy some downside puts, or you can lighten up your core position and look to add it back based on periods of time where whether it be the RAS or it be one of the secret indicator and the NYHL1M, however you're trading them, you can use the inputs from the other to make adjustments and kind of just, or you could just use it as an all in, all out type of trading system.
yep, that's right. That's right.
So it's offering members a
It's
lot of flexibility.
right, right. It's like we have a lot of information over here. You can choose what you want to use, and depending on how, if everything is pointing up, then you're safe, stay long, max long. When they're pointing a little bit in different directions, protect yourself.
So just to dive into some questions here, and some of them are going to be short and some of them might take a little bit more time, but why the 19 moving average with the NYHL1M system or indicator?
Why the 19? Okay, so again, it's all about system development, right? So I tried a few others. The 14 period, the 13 period. When you go to lower values on the average, what happens is that you get more whipsaws, you get more signals. It will become more sensitive. So we wanted to kind of get a value where it is not extremely sensitive, but at the same time, we wanted to keep us in the trade as long as possible. I mean, it's kind of everything ties to that system development concept, right? Optimization. So right now, 19 seems to be the best value. It doesn't always have to be the case, but it's something that we can review as time goes by.
Well, that sounds good. The let me just take a look here. The cumulative high low that you're calculating, do you do that only at the end of the day after the close, or is that something you track in real time? And could it offer value for intraday trading?
No, I did try tracking it intraday, but it makes more sense to just use it as an end of day value. Intraday it doesn't seem to offer that much value because the highs and lows, they tend, unlike the advanced decliners, they just tend to reach a level and stay there. Unless the market really moves, it stays there. So intraday value is not as great as using it as an at end of day.
And there were some questions just about the past history of the trades and the tracking. And I did just kind of want to note and let you reiterate that this is somewhat of, especially in considering the NYHL, this is something that's a little bit newer that you've developed and kind of released to the room, kind of as of the
That,
October top. Is that right?
that's correct. That's correct. So I think earlier we used to have more of a scalp trades or slightly few day kind of trade. I think a couple of years back. So those are all not there in this table. But this method using the NYHLM, I started tracking this from September, I think, and started posting actual trades from Jan 14th. So what you see in here are trades that were actually posted in the room, and the indicator switches also from September till date, they were posted in the room. So that's what you have in this table.
Right. And that's as Princely noted, we're going to be developing an option for at least trade alerts or say real-time alerts when some of these indicators change, as well as you're going to be able to log in and get an archive right on the website of these indicators and past history. So going forward, we'll be tracking it a little bit more closely and updating users on the trades. So smart money room members of the trades. So we noticed that you use the QLD for some of your trades. What's the reason for that instrument?
What's the reason for that? No particular reason. Just NQ seemed relatively stronger than SPX during the times when I took the buy. So just for a little bit more beta, no other reason. But if I'm actually shorting the market, I'm not going to be using tech. Most probably will be using STS or SH, something related to SPX.
Right, and here's another great example where members can kind of deviate as they see fit. So if they want to just and stick right to the S&P ETFs, as well as that you can decide if it's per your risk tolerances and whatever you like to trade. Do you want to go with try a leveraged one? Do you just go right on the indexed ETF? Members you can vary how best suits your trading style.
Right, and I mean when we went to a buy, I did trade futures ES as well at 25.80. So, but I don't want to keep it simple. Just have ETFs in the straight table.
Right. So that's another great. Just again, so you as a member, you're going to be getting this information. You're going to have to kind of put it through your wash and decide the best way that it works for you. So in terms of managing risk for the trades that you do put out, or even the trade setups that you're putting out, what are ways that you use to just kind of manage risk on a trade by trade basis?
On a trade by trade basis, we will have a stop for every single trade based on. I did not include the stop in this table over here, but then whenever we posted the trade alerts, it always had a stop, and the stop will be based on the prior important low from my viewpoint. So it's kind of ties into those gray zones that I presented earlier. So the most significant area where I find that if it goes below this point, the trend has definitely turned. I keep that as a stop. It won't be perfect all the time, but more often than not, it will keep us in the trade for as long as possible.
So for picking tops and bottoms, is there a single indicator that right now you're using, or that in your testing and in your following and updating of these, that you tend to give more credence to for helping pick tops and bottoms, or is it still something that you're looking at it as a combination of what you're seeing across multiple of the indicators?
It is more of a combination, but I really like the NYHL 1M because from based on our back test, right? It has been really good at picking tops. You saw the example that I gave near 2,900. Picking bottoms, it misses a lot of at least a few, especially if it's a V bottom, it misses some. But tops, it has been really good so far. So I really like the NYHL 1M. The secret indicator combo is obviously very good. It is more sensitive though, so you are going to get whipsaws. For example, it turned down once already and then turned back up. But yeah, I mean, I look at a combination of all of them, but more importance to NYHL 1M right now.
And the RAS data, in terms of your trading and when you're looking for trades, how does the RAS data, I know you covered this a little bit earlier, but while you're in a trade, or if you're looking to take a trade, how do you use the RAS data around maybe choosing to take that trade or when you take that trade?
Okay, that's a good question. So let me go to. Okay. So the RAS data. I mean, one way that I would use it is, or I do use it right now is, um, we have got all of these low points. For example, today, tomorrow is a low point, right? And the big picture trend is up. So we should, assuming that you're not long right now, there is a long trade from this low, that is today, tomorrow, into Friday, right? It's a very short-term trade. But if that is your time frame and you're not long right now, that is one trade that you can do. Similarly, let's say this low point, what is that, 20th of February, it's a low that shows on the daily RAS, and that corresponded to this low on ES. Again, you have to time it because that's your time frame. But if you're doing it very short term, you have to time it so that you pick this low and then trade it for this high over here, which is on the 25th of Feb. So that's the way. I mean, if you're using the RAS within the context of the bigger buy, you know, the important point over here is that because our NYHLM and the secret indicator, and we've got rising, um, higher lows throughout this uptrend, it doesn't make sense to me to short, unless we actually break below this low and have, lower lows, right? But because we don't have that, we have higher lows all the way from December 24th till, we have never broken that trend. So the trend is clearly up. So there is no point in shorting in my book until, again, depending on your time frame, unless you're scalping, there's no point in shorting in my book. So you align yourself with the bigger picture trend by picking the lows. Right? So that is one way. The second way is, I look at all the data that is presented out every day. If you look at that example, today's report, so everything is ticking up. That is bullish. So every day I put this out, and I just I start the reports with the first line like this. Okay, this ticked up, this one it takes, this ticked up, this one it takes. Next week ticks up this much. Data is bullish. And there are situations where you see the opposite, everything ticking down and data is bearish. If that happens and I'm long, I make a decision to exit there. And that is actually one of the reasons why I exited one of those QLD trades. So hopefully that answered the question.
Yeah, you know what? And I think that actually takes us into a next great question, possibly even our last one of the evening. But I know you explained this in the room, and I think you also explained it not just to Smart Money members, but you referenced it to people of the flagship service as well. But can you talk about your choice of going to the sidelines, and maybe just a brief snippet of what you're seeing right now with the NYHL 1M system, and just kind of your gut opinion of where we are and why that decision was made to go to the sidelines, and what you're looking for maybe coming up in the next however long you feel confident predicting or talking about what your expectations are.
Okay. Okay. So I'll just look at the NYHLM first, so just you can see what is happening over here. So when the blue line, the cumulative crossed over the EMEA right over here, and it is going higher, we see the distance between the two expanding. Then when we corrected over here, it started falling. Now we are at new highs. But the difference between these two is actually reducing. Almost today it actually got a little uptick, but it is reducing. That to me means that the trend is weakening. Probably it can be easier seen if I go to TOS. Right, so if you look over here, this is the high minus low on TOS, right? So you can, this is where we had the extreme lows, December 21st. So you can see it went down minus 2354 new lows, and it started going up Jan 14th. This is where we got a buy. We hit our peak in the internals around here, and we had a secondary top over here. From there, it's been falling down. All the while, market is going to new highs. So there is a clear negative divergence over here, right? So it is clear that the market is weakening, but price momentum can continue for long periods of time. We can't really predict when that is going to end, which is why we actually need to see a sell signal on the NYSE at 1M before shorting the market. But from my perspective, momentum is weakening, right? And we also have a lot of counts that are getting into the topping area. So that is one reason why I decided to go flat. Or even if I am taking trades, it is much quicker. Sometimes not even able to post them; they're just scalps, right? And another good example is over here. If you look at this, this is not the highs and lows. This is the advances minus decliners, or add. It's just an indicator called add on TOS. So here, if you look at this one, this doesn't look like a day that we went to new recovery highs, right? When we were hitting the highs, we were here. Yeah, how appropriate. Let's 666 on the ad, right? That's where we actually topped and had that big fall. And if you look at what price is doing, it kept on going higher, but internals were weak. Right? So this has been pretty much the case every day. So looking at this data, it makes sense to me that we are nearing some kind of bigger pullback, right? And so that's the reason why I'm on the sidelines right now.
So now, do you have any? I know this is something you're newly tracking, newly following, but do you have any opinions or feeling? I know you went back and did some detailed kind of back testing and following the 1M system, even though you weren't posting about it in real time, looking back at the results. Have you looked at what type of action you anticipate around the period of a cross? So as this happens, um, do you have any insights about what you'd be looking for leading up to that potential cross, or is it just going to be something that you watch and wait to see as it happens?
I would rather watch and wait and see what happens. The thing with mechanical signals is that if you try to anticipate it, I mean, we already do that a lot with counts, right? I mean, so this one, in my opinion, best to keep it as mechanical as possible. The thing that we can see looking at the data is that it is getting closer every single day, but the market actually needs to start falling before we can generate a sell signal. And we are not close anywhere near that. So, even if we are going to get a sell signal, it is at least, I would say, around 10 days out.
Oh, that's very interesting. And as you mentioned, again, these are tools that, not to speak for you, but that you envision using in combination with each other, as well as maybe other types of analysis, and to then craft that trade plan that you're looking to have. Now, again, your trade plan could be to just follow along with the trades you post, or follow along with the indicator triggers, but there's also other other inputs that you could be using to craft that total trade plan and how it might look best for each individual trader.
Yep.
So Princely, thank you so much for your time with us this evening, sharing us, first of all, kind of giving us this walkthrough about what each one of the indicators that you publish about each day in the Smart Money service, what it's providing, what it means, and how you're looking at it. I think that really helps people. I know it helped me kind of see it through your eyes, and how do you break it down each day and consider it as then you're starting to go out and consider your trades. And of course, everyone, we're getting some thumbs up and some real kudos to you for your time here with us. So, but we thank everybody for attending, and of course, again, one more time, Princely, you for your time sharing your expertise with us.
My pleasure, Tom.